Welcome back. You have now started your learning path on the wonderland of financial management. This is a latter part of the introductory for this learning model. After going through this model, you should understand the key terms and main concepts so that you should have a better chance to follow and walk through the path. Let's start with the term financial management before getting any deeper. Every organization, and in fact, every individual as well, needs to plan and control the financial resources they have. Financial resources mainly means money, but also other financially important resources like funds, such as stocks and trusts. You could say that whatever you own. Likewise, you make decisions how you use your funds to achieve the goals that you have in your life. The organizations, they make the same thing. Some of the money you probably have, you just use to have some of the things that actually you need in order to keep you alive and safe. Probably such as things as place to live and food, groceries. Organizations consider things like that as well. Where are we going to have our office or locate our factory? This is an analog for your apartment. And how much money we need to spend on it. You probably think your rent as well. Or how much are we going to spend on raw materials or employees? The rest of the money you might spend on something else, you might invest it to something that gives you freedom in your everyday life. You might get a cleaner or order food online. That is an example of allocating resources in order to be able focusing on other things. So basically, you outsource some of the things in your life when you get a cleaner or order food online. We could go through this example as long as we would want to, but I assume you get the understanding of the analog between your personal life and organizations. You allocate your money, you plan the use of your money, and you control your money. Just like the organizations do, and we call it financial management. Actually, planning and controlling are the main words in financial management, and the aim is to create more funds using the existing resources. So, planning, controlling, and then we can add administrating on the list. So, planning, controlling, and administrating the funds that organizations have. That is the core of financial management. In corporations, the aim is to maximize the profits. But in other organizations, such as sport clubs and associations, the aim is probably not to provide profits, but to provide wealth. To provide something good for the environment and the people in the club or surrounding the club. It's not maximizing the profits, but the wealth for its members. Sport clubs and associations allocate, plan, and control the funds, although the goal is a bit different if you compare it to the corporations. Now we understand the term of financial management in a nutshell. We will go deeper on the term and financial management functions in next chapter, but let's now focus on other key terms that you should understand in order to be able to follow this course, this model, but also in your everyday life, or at least in your future life when you become a sport manager. Accounting, as I said, I studied accounting, and it's an umbrella term for many different financial management related processes. So when we talk about accounting or financial management or any other of these terms, they are somehow related all the time. But let's say that accounting is some kind of an umbrella term for many different terms related here in this model. Financial accounting, financial accounting, it's not financial management, but financial accounting basically means the data that summarizes the financial situation of the organization. And here we go. Balance sheet, profit and loss statements. The two most important statements or data that financial situation can be described. They can be called profit and loss statement, can be also called income statement. Balance sheet, profit and loss statement, and then we go with the cash flow statement are the main tools, and those show the financial situation of the organization. Later on this model, we will go deeper on these ones when we talk about profit and loss statement, balance sheet, and cash flow statement. But those show the situation of the organization in financial aspect. And this all we call financial accounting. Bookkeeping is the core of providing the information for the tools. So there won't be a profit and loss statement or balance sheet if the bookkeeping is not running properly, or the bookkeeper is not running properly. We will briefly go through these in the upcoming chapters, as I said, and parts of this model. So now you only have to know that these are related, but we will go deeper on them on the third part of this model. We were saying about financial accounting, and then there is managerial accounting, which is quite close to financial management already. It doesn't vary a lot from financial accounting, and neither does any of the accounting processes differ from each other that much. As financial accounting has more insight in the past, the managerial accounting is more focusing on the future. And that is the thing when we think about financial management. It's also looking in the past, checking the moment, what is the situation, and then looking to the future as well. Forecasting and budgeting are the key tasks for managerial accounting, but also providing broader information for financial decision making. Financial decision making, which basically means that there is a financial manager who is making the decision. So we will focus on decision making later on this model. And this relates even closer to financial management, as I said. So managerial accounting is pretty close to financial management, and then other accounting aspects can be a little different, but won't vary that much. You can also say that financial management and managerial accounting are pretty much the same. Accounting is aiming to make the information understandable for whoever needs it in the organization. Accounting and bookkeeping try to clarify the complex financial data. Bookkeeping is standardized so that all the data between organizations and between organizations' years could be comparable. So you could compare it to other organizations, but to your organization's previous years as well. Once more said, understandable. It's making it understandable because the data it's very complex, but the bookkeeping processes, accounting processes are trying to make the complex financial data to understandable, comparable. All the financial transactions are recorded in the bookkeeping process. Financial transactions, operations, or any other events of business in organizations. I already said this, but let's reverse a bit. What data do bookkeepers and financial managers provide then? Most common ones, and the ones that all organizations need to provide, are profit and loss statement, or you can call it income statement as well, and balance sheet. And actually, in the European Union, these documents are mostly public information. Profit and loss statement literally shows organizations' profits and losses. So the money and funds that come in and the money and funds that go out. To make it simple, it's like that. The money that comes in and the money that goes out. And of course, this is a very simplistic view because there are some records that are not equal to money transfers but affect on the other assets of the organization. So it's not only about money, but it's also about other assets that leave the organization or the organization loses. Let's have a very simple example. Organization, let's say a sport club, has footballs they sell to their members. This is an example about some asset that leaves, some asset that the profit and loss statement shows us, but the money has never left our account. So, sport club has footballs they sell to their members. They have bought the balls, let's say 100 euros each. Now the market value for those same balls are going down because the same ball manufacturer have brought a new innovative ball on the market with lower price. Our sport club cannot sell those balls anymore with the same price as earlier, right? It was 100 euros, but now there is a cheaper innovative ball on the market. So our sport club cannot sell those balls anymore with the same price as earlier. Then we need to make a reduce to the warehouse value. So we have, let's say, 100 balls. And we know that we cannot sell them on the same price as previously, or not even with the same price that we paid for them. But the payment for the balls, it left our account when we bought the balls, right? Now we have to show in our profit and loss statement that we understand that there is not the same value on the balls anymore. We make a reduce to the warehouse value. So this is an example about the recording to the bookkeeping, to the profit and loss statement, but the money has never left us. It shows in income statement a loss, even though a single penny has left the company right now, has left our sport clubs at the moment. Right. I assume that you probably understand that in profit and loss statement, you record all the profits and all the losses, not only money-wise, but records for other funds effects as well. Don't worry, we will go deeper on this topic later on. And actually, I'm not sure whether you need to even understand this, but I will explain it to you later on when we go through this model. Now you should understand the main idea of profit and loss statement. So the money and funds that come in, the money and funds go out. Balance sheet shows the assets and liabilities that organizations have. So to simplify it, what do we own and have, and what we owe for someone else, or we use but belongs to someone else. This is once again a very simple view, but it's enough for now. You don't need to understand more than that at the moment. It shows the situation with the assets, with the liabilities, but we will get back to this topic as well. But you know the very basics on balance sheet. I remind you at this point that financial management is a very broad concept. Like all the other managerial entities as well. It's not as simple as we try to put it right here in this model, but let's not make it too complex either. Some of the ones you have gone or going to go through in this EU like a learning path are complex things, but we are here to simplify the complex things not complicating the simple things. You have now gone through the introductory videos. You should now understand the key terminology and you should understand the financial management as a concept, gathering many tools, many terms, and many aspects under the same umbrella. But the main thing is planning, controlling, and administrating the funds that organizations have. Please take a while for finding some additional information from Google or anywhere else you find practical. Then take a moment to make some notes to yourself. After you think you have enough information to understand what we have gone through, start this section's practices. There are true and false questions and some word pairings to do. Take your time to work on those practices because it will help you on other parts of this model. Next section is about the role of financial management. See you there.